Welcome to the deep dive.
Good to be here.
Today, we're locked in on Ethereum. Specifically, we're looking at a short-term trading outlook.
Right. This is based on one analyst's recent take on the price action.
And our mission really is to kind of pinpoint the crucial support and resistance levels they're watching.
Yeah. And figure out what those levels might suggest about where Ethereum's price could head next, in the near term.
Exactly. It's a focused look, useful if you're following crypto or just interested in technical analysis itself.
Definitely. We're diving into the nitty-gritty of what this particular analyst sees on the charts right now. Think of it like a quick snapshot of possible immediate moves.
Okay, so where does the analyst start? They mention Ethereum is currently trading below a key level.
That's right. It's struggling a bit below the 123.6% Fibonacci extension level.
Right, the Fibonacci extension. Remind us quickly what that tells us here.
Well, Fibonacci extensions try to project potential future resistance or support areas beyond recent highs or lows. So in this case, that 123.6% level, it's acting like a ceiling right now. A place where, the buying seems to be running out of steam, at least for the moment.
A resistance point traders watch closely then.
Exactly. They watch to see if the upward trend might pause, reverse there.
Got it. And the analyst also talked about a recent price drop, calling it a three-wave corrective move. That sounds technical. What does it mean in simpler terms?
Basically, a corrective move like this usually suggests it's just a temporary pullback. It's happening within what might still be a larger upward trend.
So not necessarily the end of the rally?
Not necessarily, no. The three-wave part just describes the pattern of that decline.
Right.
It could just be the market taking a breather, consolidating before maybe trying to push higher again.
Interesting. Okay. Now, they do mention an upside target, right? $1,925. That's another Fibonacci level.
Yeah, the 138.2% extension. That's mentioned as a potential target.
But the feeling is maybe we've already seen most of that potential move.
That seems to be the analyst rate on it, yes. While $1,925 is technically out there, the focus seems to be shifting more towards whether the current support levels can hold up.
So less confidence in reaching that higher $1,925 mark in the immediate future.
It seems diminished in their short-term view, yeah. It's more about the levels below now.
Which brings us neatly to the crucial support level, $1,813. They call this a significant 50% retracement point. Why is that level so important?
Well, the 50% retracement is a classic level traders watch. It often marks a point where buyers who maybe missed the first part of the move up might step in.
Ah, like a second chance entry point?
Kinda, yeah. Or where people who took profits earlier might stop selling. So if the price stays above $1,813, it suggests there's still underlying buying interest.
And the previous uptrend could resume.
Exactly. So for this analyst, holding $1,813 is pretty key if we're going to see another push higher.
Okay, clear support. So what's the warning sign, the red flag? What happens if $1,813 doesn't hold?
Right. If that support breaks, if the price drops below $1,813, then the analyst says they'd get more cautious.
More bearish.
More cautious, yeah. It would suggest the corrective move we mentioned is actually getting stronger, selling pressure is building up.
And where would they look next?
In that scenario, they'd start eyeing the low from April 30th, which was around $7,732. That becomes the next potential floor, the next area support might show up.
So it really sounds like a bit of a balancing act in the short term. Not clearly bullish, not clearly bearish either.
Precisely. That's a good way to put it. The analyst's outlook seems quite mixed for the immediate future. There's that possibility of one more push-up if $9,813 holds firm. But there's also, a very real risk of a bigger slide if that level gives way.
Okay, so wrapping this up then, the key takeaway for you listening is that according to this specific analysis, Ethereum's near-term fate really seems to hinge on that $200 and $813 level.
Absolutely. Holding above it keeps the door open for another attempt higher.
But breaking below it, that could signal more downside pressure coming.
Yeah, potentially down towards that 1732 Siri area next.
And maybe a final thought for you to consider. How do these technical levels, these price points, line up with other information you might be following?
That's a great point. Are there, say, any big news events coming up for Ethereum? Or changes in the wider market mood? Fundamental factors.
Things that might push the price one way or the other, regardless of these specific chart levels.
Exactly. Technical analysis is one tool, right?
Yeah.
It's always worth trying to see how the different pieces of the puzzle fit together. Something to think about.